So today we are going to go over candles. I'm going to try and cover all the basics. So a lot of you will probably know some of the stuff I go over in the beginning, and then I will lead into how the candles work with the Strat and a couple other things. I don't want to go too long, but we will see how much we can get through. So basic, uh, these are candles. Green is a bullish candle, red is a bearish candle. Just wanted to go over real quick. When you see a candle like this, the rectangle part is the body, and these lines on the top and the bottom are wicks. And so on a bullish candle, a green candle like this, it opens. This is where, no matter the time frame, this is where the opening is. And when this candle closes, it's at the top. So this candle right here opened at this level and dipped down here. This was the bottom of the candle, the low of the candle. So open, dipped down here to the low, and then buyers came in and pushed it all the way back. It actually hit the high of the top of the wick here, and then it retraced, and this is where it closed. So open, close, and the wicks are the magnitude of the candle itself. On a bearish candle, your open, it's reversed. So the open is at the top. And you can see by the wick here, buyers came in, pushed it up a little bit, but sellers took control and pushed it all the way back down. Down here was the low of this candle, and it closed right here. So the important thing is obviously open, close, which direction the price is going. I don't worry about wicks versus the body. To me, I just worry about the high and the low. And one thing to think about, which I don't think many people do, is that a candle is just the visual representation of what the price is doing. And a lot of people just look at the candles and see which direction they're going or which pattern they're in. But it's just as important to understand the price action that goes along with each candle. So for this bullish candle, for instance, it started at this level here, and sellers were in control, pushed the price down to the low, and buyers came back in and bought it all the way back up to this level. So the candle, it's a good visual representation, but different platforms show candles differently. Some of them, say you're looking at an hourly candle, some of them will start at the bottom or top of the hour, and some will start at halfway through the hour. So depending what platform you're looking at, you could look at the same time frame on the same stock, and the candles can look different. So understanding what's actually happening behind the candles, I think, is very important, because the strat is all based off of price action. Who's in control of what, or who's taking back control. So it's important to understand that, I think. So these are basic candles, and I'm sure most of you know that. Now, 1 second. Okay, I stole this from online somewhere. I hope it's not too blurry. So candles, price action. It's all about price action and how it relates to the strat, because we're pushing the strat in here, trying to teach the strat as much as we can, so we're all on the same page. At the end of the day, it's all about us working together. Everyone can find different plays. We help each other out, If we're all trading based on the same system, it helps. But obviously, whichever system works for you is good. But I trade the Strat. Matt is more into the Strat at this point. So there are 3 different types of candles. There's a 1 candle at the top here, which is an inside candle. And what this means is the price is consolidating. 1 candle did not break the top, or it did not break the low. So for instance, I could bring this back. So say we have a nice green candle here. A 1 candle would be inside. So you can see we did not break the low, we did not break the high. So what this means in this case, what this would mean to me is that buyers came in and pushed this candle up. And there's slight buyer exhaustion, but not to the point where sellers take control. That's very important on 1 candles. The sellers weren't able to push this all the way down. Buyers weren't able to push it all the way up. So it finished inside the previous candle. Did not break the high or the low. A 2 candle can be a 2 up candle or a 2 down candle. And what that means is a 2 candle breaks either the high or the low of the previous candle. And this shows us who is currently in control of price action. By this happening, we know if it's a 2 up candle, buyers are in control. If it's a 2 down candle, we know sellers are in control. So for example, buyers were in control here. The next candle, it's going to open inside the candle 99 times out of 100, unless it's a gap play. So the candle opens somewhere inside this candle. They push it up, and it breaks the high of the previous candle. This is a 2 up candle. We'll write that as a 2U, 2 up. So we know just by this price action alone, what's happening is buyers are still in control, buying into the stock, pushing the price higher. What you'll also see is you can have a bullish green candle and we could have a 2 down candle. So the candle starts inside, always starts as a 1 candle, push down, and it's now a 2 down candle. And what this resembles is buyers were in control, new candle started, sellers took over control and pushed the price down. So this is a reversal. We'll go over strat patterns in a minute, but 2 down broke the low of the previous candle. So same thing if it's a bearish candle. If it's a 2 up candle, it's a reversal, right? Buyers take control, push it up. Oh, this side, buyers go, push it up, breaks the high of the previous candle, 2 up. Or you can have a continuation, 2 down here, breaks the low, it is now a 2 down. As soon as this breaks, it is a 2 down candle. Two up, buyers are in control. 2 down, sellers are in control. A 3 candle breaks the top and the bottom of the previous candle. So what this means is the price started inside the previous candle as a 1 candle. Let's say this one pushed up, right? This is a bullish candle, so we have a continuation candle, a 2 up formed here. But what happened, it hit this level here and sellers took control back over. They then pushed the price all the way down below the low of the other candle. So what this shows us is buyers came in, but sellers came in, took control back over and pushed it all the way down past the low of the previous candle. So we have 1 candles, consolidation candle, nobody's in control. 2 candles tell us who is in control, either buyers if it's a 2 up, sellers if it's a 2 down. And then outside candle, either buyers or sellers were in control, but it flipped and the other took control and pushed it back the other way. So 1 candles, 2 up, 2 down, and a 3 candle. So price action. It's all about price action and how the Strat uses the price action. We have this in the, what's it called? The Strat, learning the Strat channel thing. Trap put all these in here, put a lot of work into it. So please check it out. Now, the thing about the Strat is when a candle starts, it can only do one of those things. It can only be an inside candle, 2 up candle, 2 down candle, or a 3 candle. Those are the only 4 things that can happen on the next candle that forms. So once you start to realize that and start seeing it more, it's clear who is in control of price action at any given point. And so the Strat combos are just a visual representation of those things that can happen. So we'll start up here in the top left, a 2-1-2 continuation. So this was a 2 candle. The other candle before it would have been here, right? Would have been below because this broke the top. It's a bullish candle. Formed a 2 up. The next candle, we love these 1 candles. So inside, right? Consolidating, equilibrium between buyers and sellers. Nobody's in control at this point. But we know eventually something is going to break out of this 1 candle. You can even have multiple 1 candles in a row, but eventually it is going to break out. And those are great levels to buy in. Now, one thing to go over really quick. A lot of people ask about time frames and how we use time frames to find our entries. Time frame is irrelevant. Doesn't matter what time frame this 2-1-2 happens on. We know just because of these candles and price action what's happening. This could happen on any time frame. So this could be a daily chart, weekly chart, monthly chart, or a 5-minute chart. A 2-1, we know consolidating here, and we know at this point buyers resumed buying and are pushing the price up. That anytime you have a 1 candle, it really just gives you easy entries. You have the top and the bottom, because if this went the other way, then that would be a reversal. So the next one, 2-1-2, here it is right here, 2-1-2 reversal. I wish it was the other way, but that's okay. Red 2, price action was sellers are pushing it down. Inside candle forms, we're consolidating. Now, a lot of times this can happen off of a large move. Like if a stock runs one day, you typically might see a consolidation the next day. But whatever it may be, sellers pushed it down. Inside candle consolidating. Buyers then came in and pushed this price back up. Let's see, 3-1-2 bullish reversal, 3 candle consolidating, 2 up. So there's only so many ways you can have a reversal, only so many ways you can have a continuation. 2-1-2 bearish continuation. These, if you have a continuation into full time frame continuity, those are some of my favorite plays. And all of these are the same. The chart's in there so you guys can get an idea of what's going on. Continuations, 2-2-2. And then that's that. So now we will look at a chart. Okay. This is Apple. A perfect consolidation day, inside day. So we know we're consolidating. Even though it's red, I don't worry about that. We're consolidating, still equilibrium. You can see the open and the close are very close to each other. So you can see it opened here. Hopefully you can see that. Opened at this level. Buyers came in and actually pushed it up to the top of the wick. That is the magnitude of the wick. And then sellers came back in, pushed it down to the bottom of the wick, and then buyers then came back in. So they're battling all day long. That's what this tells us. Buyers tried to push it up, sellers tried to push it back down, and then buyers came back in. So just consolidating. Buyers and sellers are pretty much trading off. Now, what that tells us is we had this kind of bag. This is a 2 up candle, but it's red. So we those are a good sign for a reversal. If it's up and it's red, it's something to watch for. So tomorrow, depending on how you wanted to play Apple or how you felt the market was, entries. These give us our entries. So the candles themselves are how we get our entries for the strat. Very important. Time frame does not matter. Everything we need to make a play is on a chart. So how we would do this, how we find our entries, is the tops of the candle, the complete candle, the wick and the body. So this level here and this level here. Those two levels are where the price is going to form a 2 candle. And just based on the meaning behind a 2 candle, we can tell who is in control. Now, so tomorrow, the price is going to open somewhere in here as a 1 candle. And this doesn't necessarily mean it's going to break out tomorrow. But just for example, the candle is going to start inside as a 1 candle. And it's going to push up or down. We'll say down just because it's red, so it'll be a continuation. So price action opens inside. Sellers come in, push it down. As soon as it breaks 126.42, it forms a 2 down candle. And by definition of a 2 down candle and the price action behind it, we know who is in control. So candle forms, pushes it down, it breaks 126.42. We assume that the continuation is going to continue and the price is going to push past this level. Same for the reverse. If it was a candle formed in here and it broke the top of 127.39, we know buyers are in control at that moment. Buyers are pushing the price up. There's no other way the price goes up unless buyers are in control. There's no other way the price goes down unless sellers are in control. So that's why we like 1 candles, because it gives us a clear answer as to who's taking control at that moment. And 1 candle of consolidation, and then we look for these break of these levels. That's another one. A lot of 1 candles today. There's a lot of consolidating. Okay, so here is a 3 candle from yesterday for Bank of America. Banks got killed. So the candle opened inside the previous candle. So it started as a 1 candle. Buyers came in, pushed it up, actually made a 2 up candle. As soon as it broke this level, so as soon as it broke 42.78, it formed a 2 up candle, right? And it ran all the way up here to 43.25. But right at that point, the top of the wick, sellers came in and pushed the price down heavily. came in all the way back through the previous candle, right? And then as soon as it broke 42.25, formed a 3 candle. So buyers were in control, pushed it up. Sellers came back in, pushed it all the way through, and formed a 3 candle through the previous low. And then buyers came in a little bit at the end and pushed it up to here. So today's candle opened inside, and it got pushed down to form a 2 down candle, and then buyers bought it up. But the key is, we knew at the end of the day yesterday, sellers took control and they pushed the price all the way back down, huge move. So here we know there could be seller exhaustion, but the way that how powerful that move was, we look for the low break. Even time frame continuity we'll go over later, focusing on candles. And in the morning, I know this happened right in the morning, all banks continued to sell off right at open and sold off down here. So if you got in this move, 41.93, sold off to 41.66, I know the bank plays that were on my list were at least 20% plays. Some were a little more depending on which one you got in. So 2 down candle there. Okay, another one you can see, this is a 2 up candle, opened inside, buyers came in, broke the level, but sellers came in, didn't like that, and pushed it right back down. So real quick, this is why we keep our stop losses tight for plays like this right here. Buyers were in control of this at the start of the day, pushed this up, broke 104.88, but it was rejected at 105.19. So would have been stopped out of this play. And the reason that we have a tight stop loss is because we, just by the definition of the candles and the price action of the candles, a 2 up candle once formed should keep being a 2 up candle. Doesn't always happen. This one failed and rejected. But the reason we bought into this play is because it broke the previous candle's high, was forming a 2 up. So we're looking for buyers to push the price action higher. And this one didn't. So the thesis of this play, you hear me say this a lot, the reason we got in, have a reason for getting in a play. This was our reason. We bought in the break on a 2 up candle. It failed. As soon as it fails and drops below this level, your thesis was wrong. So there's no reason after that point to stay in this play. Do not sit there and hope it goes back up. You know, that will kill your portfolio. Soon as it fails, get out of the play. My stop losses are very tight and it works. You know, I'll have days where I get stopped out 3 times in a row and then the 4th one runs. So that's very important. This was another one on my list. Tough day for banks yesterday. We looked for continuation. Citibank broke down. Previous candle was here. 77.19 was our level. That happened right at the beginning of the day. And you had a move to 76.68. That was, you know, a 20% play. Not a big move by any means, but a nice quick gain at market open. Here is, this is, even though this gapped up, this is still a 2 up candle. It broke the previous high. So still a 2 up candle. A lot of people ask about that. Let's see. So those are how we find our entries, the top and the bottom of candles. And when I am charting, I have 4 different time frames up because, once again, looking at one chart on one time frame is very subjective to the platform you're using. That changes a lot of things. So multiple time frames give you a better idea of what's going on. And full time frame continuity is based off of the candles. It's all, the strat is all price action based, which is all based off candles and where the price is going. So you can see Citigroup is down on the week because of the past 2 days, but yearly is green, monthly is green, daily is green. Banks have been running for a while. And the reverse for BABA. This one's been getting hammered. Red on the yearly, red on the monthly. It's green week and red on the day. So let me see. Let's find a full continuity play. We can look at Dave's list and steal one off there. Okay, PDD. Red on the year, month, week, and day. I don't worry about the quarter. So we know for a fact that sellers are in control of this stock. There is no other possible way that you can be red on year, month, week, and day unless sellers are in control. There is no disputing that. And that is the key to strat plays in particular. And I can tell you this works. I used to trade breakouts, never knew what full-time continuity was, but since I've learned it, the breakouts are just so much stronger. I mean, PDD today, this is a really nice move. So yesterday we had a 2 candle, right? But it was red. So I always look for those for a possible reversal. So it was a 2 up, it was red, and this would have been our entry right here at 130.20. And then the price actually opened up here at the top, but sellers came right back in and pushed it all the way down, broke the level, and that would have been a nice move today for sure. So tomorrow, how do we find our entry? Full time continuity, full time frame continuity to the downside. All we do, mark the bottom of the candle, 121.50 tomorrow. Not sure what price was on Dave's list. I would assume that's it. As soon as it breaks that candle, sellers are in control of this stock. And does it work all the time? No, because you can see the green days here when it's getting chopped up. But more times than not, this will work. Sellers will come back in eventually and push it down. I'm not going to go over broadening formations today. I don't really use them because I day trade. So I just go day by day there. Neo, try to find one to the upside. Okay, MS. So another bank, full time frame continuity to the upside, yearly, monthly, weekly, daily. Had a banks again in the morning, like I said, got slammed down. Buyers came in, pushed it back up because buyers are in control. So tomorrow, full time frame continuity, if you wanted to look at banks, top of the wick, once the candle forms inside, as soon as it pushes up, I don't know if you can see that, doesn't really look like a candle, but as soon as it breaks that wick, that is a 2 up candle by definition, buyers are in control. So probably look for banks to have a rebound tomorrow, push up. We'll see what happens. So this is how we get our entries. So time frame, the only difference that time frames make are different levels. And the theory is the higher the time frame, the stronger the breakout will be. So if there's a lot of people who will just trade weekly breakouts, a lot of people who will just trade monthly breakouts, and it works. You know, it's the great thing about the strat is that you can mold it to fit your style of trading. And I know a lot of people who trade the strat. I don't know anybody who does it exactly the same way, right? You know, people look for certain things, but it can be molded into your strategy, into your play style, which is a great thing about it. So here we can see Morgan Stanley. This is the weekly chart. It's been having a rough month. I think buyer exhaustion. Banks have just been going crazy. And they've been running for a while. So buyer's still in control, still a green candle. So we would still look for that to push back up. That is that one. Here's a good example for a reversal play right here, Microsoft. Okay, so this is on the weekly, so these are all valid as well. You can just see here with these wicks, by price action, we know what's happening. We're not wondering what's happening. We're not guessing what's happening. We know what's happening. So 3 candle here topped out, right? Buyers pushed it up. A 3 candle, buyer exhaustion set in. Sellers came back in, pushed it down. But one thing you can see what's happening here is sellers keep trying to push this down and buyers are not having it. Buyers are buying it up each day. So in the earlier on in the day, sellers are pushing it down, then buyers come in to push it back up. So this is something to keep. Well, this can only happen so many times. Then you can see we had a consolidation day with the same thing happening. So we have our level here. And then obviously the weekly. So you can set this and just wait. Set an alert on Monday and wait for it to happen. And great thing about TradingView, I believe if I change the time frame, it will stay there. Yep. So this would have been there. And you can see on the weekly when it broke out, buy into it and ride it up. And once the market stabilizes, this is going to be great for swing trades because you can just go up higher on the time frames and set your candles. So this is actually nice right here. A 2-1, 1 candle here. Sellers tried to push it down, failed. Buyers buying it back up. So there's a lot of different ways to play something like this. Some people, so once they sold it down here, this is a huge move to miss. So, you instead of waiting up here, find the risk that works for you. Some people will buy this halfway up the candle because once it starts pushing back through, we know buyers are in control and we want to ride that. So as long as buyers are in control, we want to buy in and push this back up. And this can work with options. It can work with commons. The strat can work with any type of trading, cryptocurrencies, whatever it is, because it's all about price action. We know who is in control. And right now, buyers are pushing Microsoft back up. Look at Facebook, same thing here. So for instance, if this was that Microsoft chart, if we bought in where Microsoft is right now, buyers are still pushing it up. So as soon as this forms a 2-up candle, right there at 331.81, that's a 2-up on the monthly. Buyers are in control. Push towards all-time highs. I'm pretty sure that's going to break shortly. I don't worry about volume. I don't honestly worry about anything. This is how I chart. I have 0 indicators on my charts. Yeah, I don't want to sound too culty, but all indicators are lagging indicators. They tell you what's happened before. Price action tells you what's happening right now. So as soon as this level breaks and forms a 2-up candle, buyers are in control. There is no other way that the level breaks into a 2-up candle. That's how I see it. It makes sense and it works. So I don't use moving averages, MACD, RSI, any of that. I just strictly play price action. And what Facebook is telling me right now, buyers are in control. They want to push this into a 2-up candle, and that's what they're trying to do. And if we go to the daily, I mean, you can see what happened on the month right here. You can see the sell down, right? That's the wick. They sold it down here, and then buyers pushed it back up. So, I mean, you can see that same monthly candle. Let's see, May's right here. Yeah, you can see it all right here. This is why I'm saying multiple time frames give you a better idea of what's actually happening. So sellers tried to push it down. This was all-time highs. Buyer exhaustion set in, came back down and pushed right back up and is looking to break that high again. So that's all in this candle on the monthly, and you can see the same thing. So the key to the strat is price action, which is based off of candles. That's how we trade. The high and low of the candles, time frames are irrelevant. Show you the 5-minute chart real quick. For instance, this top part right here. Right here you can see we had a 2 down, but it was a green. Whenever you have a 2 down and the color is the reverse, we always look for reversals. So this play reversed to the upside here, 2 up continued, and then we had a 2 down. So we had a 2-2 reversal here at the bottom, 2-2 reversal here at the top. And that's when you're looking for the break of that candle to the downside. So one thing real quick is this was a gap down play. I just let these go. There's too many other plays to worry about missing a gap down play. If it would have spiked back up and then rebroke, I love those plays, but if it gaps, I just don't even worry about it. And then this is the great thing about day trading in my eyes is you can trade this every single day. Even though overall would have been a great swing trade, you just never know in this market right now. You can see each day this would have been a profitable trade to the downside. These would have been your entries every day. Buy in there. See this one right here? This is pretty nice. So this gap down, you can see this is where it opened right at this level. But buyers bought it back up at open, and then it rebroke the level. And so what this tells me is that at market open, gap down, all the people who shorted this stock, not all of them, but a lot of them are taking profit, push it back up. Profit takers get their money, and then the sellers resume pushing this down. And that to me signifies a really strong play, because this isn't buyers pushing this back up in my eyes. It's sellers taking profit, and then they continue pushing this down. And this would have just been a monster move in one day. And then again, buy in here, same thing. This one gap too. Gap, profit taking, sellers resume selling. Buyers tried to buy this up end of day, didn't work. Sellers came back in the next day. We had our entry. Boom, we played it again to the downside. So, sorry, this is a 5-minute chart, but you get the idea. Every 5 minutes, it continues downward. So daily doesn't matter. Like I said, time frame is irrelevant. These would have been entries every 5 minutes on this chart, and you could have got in at any one of these. And then nice 5-minute reversal right here. 2 inside consolidation, green candle. We look for reversal, and a 2 up right there. Another 2 up continuation. And what do you know? A 2 up, but it's red. And what happens? We reverse back down. So, just follow the price action. It works. And real quick right here, because this is a nice setup. One thing that the Strat uses is pivots. All of these marks right here are called pivots. And what's happening there is that whoever bought in to this candle puts their stop at the top of the candle. So right here you can see this where it retraces back up, reversed back up. These are all pivots. Let me just draw this real quick. Okay, so everyone who bought and went long on Facebook on this reversal right here, this guy bought in here, it's pushing up, he sets his stop at the bottom of the candle. Very important. This candle open up, everyone who bought in here set their stop here. Same thing here with this candle, they buy in, they set the stop here. Same with yours. Now what this does is when the price comes back through this range, we're stopping all of these people out. So when the shorts come in and take control, really take control here, as they sell off this stock, everybody who went long in this area right here gets stopped out. And what that does is it sells their shares when they get stopped out. And what that does, sellers are in control. They have to sell the cover. Sellers are selling to push it down. It accelerates the selling of the stock. Every time one of these levels is hit, they have to cover. In this instance, the price is going down, so they're selling, and it pushes the price even faster. And if you start charting like this, you'll be amazed how often candles end at these pivots. So here you can just see gap down, and this nice red candle stopped out all of these wicks right here, all 3. Didn't hit this last one, but still a very nice move. I'm trying to see. It's the same for the reverse to the upside. Oh, here's a good one, Home Depot. So let me take that off. Okay, I made a lot of money on this trade right here. So let me just draw the pivots real quick. Whenever I see a setup like this, I I actually started watching it down here because you can see I could draw these pivots all the way back down. I was watching this one for a long time, made a couple plays in this area, but buyers kept pushing it up. This was all full time frame continuity plays to the upside. Um, and then at this point is where we waited to buy puts. So, and this freaking candle up here is just perfect for a reversal, right? Inverted hammer, I'll call it. Nice setup for a reversal. And what happened here is it gapped past our entry. But I had been waiting for this play so long. I do not buy the gap. What I did was I waited for it to break this pivot. So I missed my entry at 339.54. Um, that's okay because there's more. You can find another entry with the strat. Do not force a play. Find a reason to be in the trade. Be patient. If you miss a trade, there's 10 more trades tomorrow. So gap down, I was a little bummed, but I waited. So we missed 339.54. Our next entry was 335.53. Bought in this one and it just shot down, right? Every pivot this hit just accelerates it to the downside. And I mean, we took out multiple pivots this day. And I'm a day trader, so even when the buyers bought this back up, I got out, wait for the next day, and this was the really, really nice trade because it opened down here. And what happened? People took profits. Buyers, I'm sure this is such a big move, profit taking. Buyers are buying this up a little bit. It broke my breakout level and breaks up, reverses back down. Sellers are in control. So even though this is a full time frame continuity, we have our pivots. And I don't know if any of you have heard this term, triangle day out. Rob Smith says it a lot. And this day did it. So I'll explain that in a second. Bought in and we took out all these pivots. So what you see here is a triangle pattern. And this is one way we like to play the reverse of a time frame continuity, right? Because it has to come back through the range. So it pushed up, price pushed up this way, all these pivots formed, and it came right back down through the range, right, to form this triangle. So all these people here all got stopped out on the downside of the triangle. Hit all of these pivots, and then like I mentioned before, when you get such a big move like this, it's going to follow by consolidation. And we had 2 days of consolidating and then came down a little more, and now we're just trading sideways. So and this is what they call a pivot machine gun because it just comes in and it wipes out all these pivots all in 2 days. You know, it took 2 weeks to run it up and 2 days to slam them all out, stop them all out. So it's really a nice move. That's pivots, um, stopping them out accelerates the price in that direction. Um, so a lot of people, real quick, and this will be the last thing. Been here for a while. Sorry to keep you. Trading view, I use to trade after hours. This is how I get my setups for the next day. Um, Intraday, I'm using Thinkorswim. I mean, look at how beautiful this is. So bottomed out off the top ADR, formed a 2 up here, red, did not buy this. I bought this one and bounced. We got a 2 up, nice green. I mean, you can just see buyers are buying this at this given time. Pushed and then just went crazy. Of course, I sold right about here, but what are you going to do? So candles show price action. They give you entries if you're wanting to trade intraday. I had one person say, I can't trade the strat because I don't have time. And it makes no sense. They don't really know what the strat is, because you can come in here at any part of the day and you can find trades. You know, if you came in right here, you see we reversed here, right? 2 down, but a hammer, pushed up, 2 up, 2 up. We know right here at this level, at this 2 down, you can buy, you can go short. And this is still the 2 down, did not form a higher high. So even though it pushed back up, the play is still valid. 2 down, 2 down, and then inside candle would be your sign to exit the trade. So again, where I got in, we had a 2 down, 2 down. I'm not sure why, you know, when this pushed up, you could have bought in there, might have been stopped out, but this is a beautiful candle, beautiful break. And when we're trading these breakout levels, not every breakout is the same. Obviously, this candle much stronger than the previous candle. So stronger breakouts are, you know, better breakouts, more likely to succeed, higher probability. And so that's how we use the strat to find our entries. You can also use them to find exits as well. So let me go back to TradingView. I don't think I talked about this. So these pivots on, say, Home Depot to the downside, it gives you exits. You can take profit here. I mean, some people even use pivots to add to their position depending how strong a move it is. But so you buy in at this pivot, say I bought in at 335.53. All I'm looking for is 333.23, and I could sell right there. Does it always work like that? No. But it can give you your entries and your exits as well. So the next candle would be your exit or your profit taking. These charts are not nice. Okay, for example, cat. So let's say we wanted to go short tomorrow. We know our entry, 236.62, and if we wanted, we could find our exit right here at 236.22. Not a huge move, but you know, it gives you the levels to look for. If we wanted to play this to the upside, because we have full time frame continuity to the upside, we have our entry, 239.50. We have somewhere to aim for, 241.89. So this is how we find our entries. You can find your exits. Time frames do not matter. It works on a 1 minute chart. You know, anything, monthly, even yearly. If you didn't want to sit there and watch something, you could go on a yearly chart and find an entry and buy it and let it sit and let it run. So if anyone has any questions, Trap set up this nice VC questions chat room. That pretty much sums up candles. It might, here's Costco, had a 2 up but red. We're in full time frame continuity. We see these pivots. We can draw these in real quick. So if you wanted to look to short Costco tomorrow, entry 385.02. There's your pivots. You know, it almost looks like a decent play. How do you set up ADR? Do you have Thinkorswim? I think I do have. Okay, hold on one second. Wait, I will share it first. That is the script. So what you'll do, you click on that and it'll bring up this screen. I do it manually because it never works automatically. So you click this plus, you click to copy that, that copies it, and then that's when you go. I think I have it on TradingView. I'm not sure. Is it this one? Yeah, ADR right there. Surewind. I don't know if Trapped uses a different one or not. Oh yeah, there it is. So you can see the lines top and bottom. So yeah, works on TradingView too. I don't know this one's set to because that looks like a big range, but you can modify it. I go 5-day average to get mine, and it works really, really well. Let's see. Do you have your stop set to trigger based on the underlying stock? No, my stops are all based on percentage. That's how I do my profit taking too. Once I'm in a play, I have rules set to the point where I really could not even watch the chart because I have certain percentages where I take profit, and I have percentages where I get stopped. So it's all based, to me, it's based on percentages, but I know other people do things differently. When I find an entry, there is no, it triggers when it triggers. It can trigger 10 minutes into market open. It can trigger at the end of the day. And I just wait for it. Patience is key. And don't force anything. Find an entry, find a reason to get into a play, stick to it, and it will just help you so much. And I know, Holland, we were talking that one day. I said, why'd you get into that play? And have a reason. Not only does it help you in the play, but it gives you confidence in the play you're in. You know why you got into a play. We're not hoping that something's going to go down. I didn't hope Home Depot was. was going to go down. I waited until it went down. One other thing, real quick. I know I'm keeping you guys way too long. A lot of people buy plays and you say, well, why'd you buy it? And they sit there and they say, well, I was hoping it was going to reverse. Okay. Playing the strat, you do not hope. When you buy into a stock, you are buying the reversal. For example, right here, Costco. Don't even know what time frame it is because it doesn't matter. 2 up, red, right? This is still, is this a reversal? To me, no, right? Because it has not broke the previous candle. But we know once it breaks below this level, by definition, we are not guessing, we don't think, this is a reversal. You are buying a reversal. We're not hoping or thinking or any of that garbage. You buy here when it gets below 385.75, boom, that's your reversal. Actually, it's up here at 386.25. Soon as this candle forms and breaks down below this 2 up candle, it is a 2 down candle. That by definition is a reversal. So, I mean, it just makes everything easier. You understand why you're in a play, and reversal is just price based off the candles. I should clarify that. Based off the candles, because if this same play at Costco, we probably could have got a different entry on a smaller chart. Did it reverse on every time frame? Yes. But on a different time frame, it would have reversed at a different time, if that makes sense. But that's why find a time frame that works for you, stick with it. And I use mainly 15-minute charts. Cleaner for me. I heard some strange people use 7-minute charts, some 5 and 1, whatever you want. A lot of people do hourly charts too. Find one that works for you. That's the great thing about the strat, is that there's many different ways that you can utilize the candles. So I hope I went over enough, probably too much, but we are going to end it here. Any other questions?